All right, y'all, we back. We're talking about generational wealth tonight. This is the type of message, this is the type of live that you want to make sure that you invite everybody else in your contact list. Invite everybody that is your friend, your neighbor, your associate, those in the business world. Make sure that you tap in and invite everybody that you can to this live that we're about to do tonight. What's going on, y'all? Hey, peace and blessings. All right, you back in, bro.
All right, cool. So we back.
I'm
All
just
right.
getting it in.
What
All
we
right,
talk?
yeah, so just go ahead and briefly introduce yourself and tell them what it is you do, Mar.
Yeah. So I'm Marvin, man. I help people to build their own bank by utilizing high leverage life insurance, man. Many people don't realize that they can actually use life insurance to actually build wealth.
Mm.
So, I know a lot of people they talk about, stock market, Wall Street. I do all of that too. But what we're really behind on is learning some of these alternative ways to leverage your money so that you can really make money more than one time off the same dollar. So what I do is I teach people not just about the life insurance, but I teach people how to actually use it the same way Rockefellers use it, the same way Warren Buffett used it, the same way Trump used it.
Mm.
You know, high net worth people are using this and they don't need life insurance. But by the end of this conversation, you're going to understand why you're going to want life insurance. And you got to understand, and also you'll learn why life insurance is actually more so for your life than it is for your death. That's why they call it insurance. And I'm going to show you how to use it the right way.
I love that, man. Thanks. Now, I've been hearing more and more people talk about this as a tool to build wealth, but why do you think it's so difficult for people to wrap their minds around it?
Because it's something that you don't learn about.
Mm.
You don't learn about it until, they're not teaching you this in school. They're not teaching, because in corporations, they're really teaching you about your 401k. But quite frankly, there are a lot of ways that people are losing money unknowingly and unnecessarily. So to give you an example, the way that you fund your 401k, if you work at a regular job, you're essentially putting your money in prison until you're 59 and a half. You can't even touch it to build wealth until you're 59
Jeez.
and a half. So we're tied. You got to understand the reason why people don't understand it is because we're tied to a system that doesn't want us to understand it.
Mm.
So
Mm.
think about what I mean. The system, so that you can retire when you're 65 and you can finally live the lifestyle that you want to, right?
Mm.
But the reality of it is that people who are wealthy, they don't follow that system. They're not saving in a 401k until they're 59 or 65 years old. They're
Facts.
living the life that they want to now. Myron Golden said, the quicker you get to your dreams, the longer you get to live them.
Mm.
We're in the
Facts.
business of helping you to get to your dreams fast, not get to your dreams slow. So if you want to get to your dreams faster, let me see you write the words faster in the comments. I want to make sure I'm talking to the right people in the room today.
All facts, y'all. Make sure that y'all write that in. I know I want it faster too, Marvin, because I personally think that if the situation is right there in front of our face, we a fool for us to not tap into it.
Yeah, the Bible says my people are destroyed because of their lack of knowledge.
Hmm.
So it's not that people don't want to tap into it, it's just that you don't know. But once you know, so you got to understand there are things, Manny, that people know that they know, right? Like I know how to tie my shoe. I know that I know how to ride a bike. There are also things that I know that I don't know. Like I know that I don't know how to do brain surgery. You know what I mean? I know
Facts.
I don't know how to do heart surgery.
All right.
But then there are things that I don't know that I don't know.
Mm.
I call these my blind spots. So if I
Mm.
don't know that I don't know it, how can I search YouTube to find the answer
Mm.
when I don't even know I don't know it? So
Facts.
when you get into the realms of things that you don't know, and when it comes to this life insurance hack that I do, there's a lot of people they didn't even know it exists. So how can you search for it? And that's when people are saying, "Well, I'm gonna just go to Google, I'm gonna YouTube everything." Well, that's cool if you know that you don't know it, but how can you search for it if you don't know that you don't know it? You know what I'm saying?
Mm. Yep.
So I
Absolutely.
ask people like this: you just don't know the strategy, you just don't know the game, right? First time, Manny, you played tic-tac-toe, who won? Was it you or the person that showed it to you?
All facts. It was that person that showed it to me.
They won because they understood the game. They understood how it works. Now,
Yeah.
once you understood the rules to the game, you was able to at least compete. And that's what I'm here to do. I'm here to make sure that people at least compete. So I want to get straight to the meat to make sure that y'all understand how this works, right? First off, you got to understand there's three different types of people when it comes to money. You have your debtor, you got your saver, and you got your wealth creator. Which one are you? You got to be able to identify yourself. The debtor, they're going to go into debt and they're spending their entire life trying to get out of debt. They're buying depreciating assets, right? They're in a rat race. Their goal is to get back to zero. They say, if I can only get back to zero and I'm debt free, then I'll finally live the lifestyle that I desire. But the reality of it is you're just at zero. Congratulations, you're at zero. The saver, they're saving money, so they're above water, but then they go out and spend it. They go out and buy a vehicle with cash, and they're happy because they say, I didn't use debt. I used all cash. Mm-hmm. But the problem with that is every time that you use all cash, what you're doing is you're actually interrupting your compound. You're interrupting the forward momentum of money, and what you're missing is the opportunity cost, because now you got to build that savings back up, and you're not making money off money you don't have anymore. Thanks. But what I teach people is how to be a wealth creator. How can you make your money continue to grow uninterrupted as if you never touched it, so that you never stop the forward momentum of your money, and that you keep compounding that money while you still keep living the lifestyle that you dream of? So that's really what it's all about. So how do you use life insurance to do that? Well, first off, let's understand that if you structure your life insurance policy the right way, it has to be a permanent policy. If it's structured the right way, you will structure it to get the highest amount of cash value, but the lowest amount of death benefit. You don't want a high death benefit because you want most of your money going into the cash value. Now that that money has went into the cash value, you have a tool that you can leverage. Now, if you don't leverage it, don't do it. Mm-hmm. This is not an investment. This is a strategy. So the strategy is, if I know that I have this tax-free money here that I can borrow against, and it keeps growing, why wouldn't I take advantage of it? Why wouldn't I borrow against it? So if I have $100,000 cash value and I borrowed $40,000, and I know that $100,000 is still going to be worth $105 next year, even though I borrowed $40,000. Well, now, whether I borrow from it or not, it's going to grow the same. So it's crazy for me not to borrow against it. Does that make sense?
Yeah.
So give you an example of some things that I did. And I'll use the same example. I used it to buy real estate, right? So I needed a down payment of $30K. I borrowed the $30K for my insurance. The money was still growing as if I never touched it, tax-free. I made a profit on the real estate, and then I went ahead and paid it back. So I used the $30,000 as a down payment. I made about an $80,000 gain on a flip, and then I went ahead and paid it back. So now, the reason why I paid it back, it increased my borrowing capacity for the future. So I made money 2 times, and I increased the return. I use it for options. So the tricky thing about options is that you can lose all your money that you put in, but you can also make a lot. Yeah. That option. So my guy Wasi, I saw them in here earlier. What I did with that money is I actually got an option play. I made money doing it, and I was making money off of my insurance policy at the same time. Now, if I would have lost, here's the key. I would have hedged my loss, which means in the insurance game, when you borrow money, you don't have to pay it back. It's not like a bank loan. If you don't pay it back, it's subtracted from your death benefit when you die.
Okay.
So technically, if I would have lost on that options play, I still would have been making money off the money as if I never touched it. It just would have been subtracted from my death benefit when I died.
Gotcha. Okay.
Another trick is when you borrow against it, it's an interest-only loan, which means that technically you don't even if you pay that loan back within 12 months, not only was it continuing to grow, but you never even paid any interest off of it. So, I mean, it's a crazy situation. When people learn this game and they learn how much extra money that they can have by doing this, it's a game changer for sure.
Oh, yeah. I can only imagine, because everything that you're saying, it sounds so lucrative. There's so many moves that can be made with this particular strategy. And that's why I'm glad you said strategy and not necessarily tactic
Hmm.
or this is my only investment option that I'm gonna do. Because you can't. I mean, people always gonna say don't put all your eggs in one basket, right?
Yep.
But also, right from the beginning, if you ain't got no strategy, then you're literally wasting time, money, and energy on that whole process. Hey, can you go ahead and answer that question that's in the chat? It says, what was the interest rate being earned on the policy?
I'm not even seeing it. So hold on. All right, I'll just answer the question. For whatever reason, I'm not seeing it, but it depends. So let's just say, so there's two different types of policies that you can get if you structure the right way. It's whole life and index universal life. Hold on one second. Let me go off the screen
Yeah.
and come. There we go. So it's whole life and it's index universal life, y'all. Whole life, the benefit of whole life is that you're getting the same fixed rate of return every year. It could be 4 to 5%, right? Um, the benefit to that is you could borrow against it quicker. Sometimes after 30 days, you could borrow your money. So
Mm.
you can get to it quicker. The downside is it's still only 4 to 5%, which again, we're not buying this to attempt to beat the stock market. That's what you have to understand. You're buying this think of it as a savings account on steroids, not an investment account. It's a savings account. What I call it, my nickname for it is the wealth creation fund. This is
Mm.
not the fund that's going to give me my wealth. This is the fund that's going to give me the ability to create wealth in other places when I use it. Does that make sense? The second type of policy you get is called an index universal life. Now, index universal life grows a little bit different. The way index universal life works, you can make up to 10%. There's a cap. So if the S&P does 5, you can make 5. If it does 10, you can make 10. If it does 15, the most you can make is 10. But if it goes down, you don't lose. Now, you're going to average more. It's going to be more of a return on that type of investment. The downside is you can't borrow against it as quicker because it's much more of a long-term play. In fact, they want you to wait 2 to 3 years before you begin to borrow against it. So the answers that you want to know is, are you looking for more long-term growth that you can borrow against a little bit later and you can hold off? Or if you're looking for something with a little less growth that you can borrow against right away? So the good news is you don't have to choose. I have both. So it's just a matter of what your preference is and what you plan to do with it.
All right, so let's just give an example. So you got this young cat coming to you. I'm gonna say young because I'm 40, Marvin. So young to me is 30 and under
Right.
that. So this young cat come 30 years old saying, "Look, I'm single. I definitely want to build some wealth, but I'm not sure where to start." Now, if this person ain't got no business, no housing investment, nothing, they literally just starting fresh. Like, what would you recommend to that person?
So no money at all?
No money at all. They probably working a regular job. Let's just say they're making 50K a year.
All right. So first off, I would say is those who are faithful with little will be blessed with more. So even though you don't have a lot right now, the way that you manage the little that you have is gonna make a big difference. Second
Facts.
thing I would say, if you don't have any other investments, my first investment would be in myself. So mentorship. Who can I pay that's going to guide me and lead me where, number one, I can make more income. I need to make more active income. I need to sell something. I need to figure out what to do. I need to read. I need to figure out how to get a higher paying job, like quite frankly, or a business or both.
Yep.
And then after that, once you start making a little more income, if you're still working on a job, my first thing would be to say, maybe we need to start investing in a Roth IRA. A Roth IRA is just going to give you the ability to start contributing, growing that money for the future completely tax free. And once I start doing that, then we look at building up our emergency fund and then maybe tapping into a policy as I'm continuing to grow my investment. So it's really a path for you. I mean, you want to make sure that you're budgeting your money. You want to make sure um, that you have that emergency fund starting off at least 1,000. Then you start saving in the Roth, and then you get it to at least 3 to 6 months of living expenses. That would be my start. Now, for people who are already saving, you just want to make sure that you're not making some of the most common mistakes that most investors make that they don't know that they're making.
Hmm.
Which one will be overfunding your 401k. Now, look, when you put money into the 401k, if you're working, and they offer you a match, that's great. Invest into the match. They're basically giving you free money. Nothing wrong with getting free money. The problem is you enslaved in a system that if you're overfunding that 401k, what you're not realizing is that you're locking that money up until you're 59 and a half. You're putting that money in jail. And if taxes go up, you're stuck. So if I'm younger, I'm not looking to overfund my 401k. I'm looking to keep some of my money liquid for investment opportunities. That's when I'll say, okay, well, if I'm not overfunding my 401k, where do I put that extra few $100s? That's when you start to look at a policy to start building that wealth on the outside, because you're essentially, with the life insurance, you're doing two things. You're building up an opportunity fund to take advantage of future businesses and future opportunities. The second thing that you're doing is you're buying wealth. You're buying wealth while you wait to create it.
Gotcha.
And what I mean by that, God forbid, if you die while you're attempting to build the wealth, at least you got it there for your family. But it's kind of like a hedge there, so you can continue to grow your wealth while you're waiting on that wealth to grow. Does that make sense?
No, yeah, that makes sense. That makes
Yeah.
sense.
So
Yeah.
that's what I'm doing. The second mistake that people make is they have a mortgage, and they say, well, I'm going to get this mortgage paid off so I can be debt free. So instead of getting a 30-year loan, they say, well, I'm going to outsmart the system, and I'm not going to pay that much interest. So let me get a 15-year loan and let me pay extra for this mortgage, because then I could pay off some of the interest. It sounds right logically, but it's not a good decision. Number one, interest rates are historically low right now. Number two, if you're paying $1,000 a month for your mortgage today, and you got a 30-year loan, even if you're still living there 30 years later, remember, you're still paying $1,000. So $1,000 20 years later is going to be like you're paying $300 a month because of inflation. Remember, your income will continue to grow, but that mortgage payment won't go up. I would rather use that spread to actually build an income source that if I chose to pay off the house, I could pay off the house completely tax-free with this wealth creation fund, rather than actually giving the bank access to my money. And if, God forbid, you lose your job and you try to get that money back, they're going to say you can't get the money because you're not making any income. So you need to fill out this 15-page document, and we'll decide if we give you your money back. So you essentially giving the bank more control of your money. So if we're going to use the banks to create wealth. Use them for the other people's money that they provide. Don't take away that main benefit that you have. Does that make sense?
Yeah.
So that's another mistake. The way you pay for college savings is a mistake. If you have kids and you say, well, I'm going to invest my money into this 529 plan. Well, most people don't realize that the 529 plan counts against the student's income, which means it's going to take away their ability to get financial aid in the future or scholarships in the future. And the tax benefits are not as great as you think. So with that being said, you got to choose between investing for your life in retirement and investing for the child's education. Whereas, again, if you put that money into a wealth creation fund, guess what? You can borrow against it for college. You can borrow against it for income. You can borrow against it for businesses, for opportunities. And there's no age restrictions. It's tax-free. It grows tax-deferred. You can pull money out of it tax-free. And on top of that, it's creditor-proof. Nobody can sue you for the money. It doesn't count against financial aid. Like, it's literally just hidden from the government in a legal way.
That's crazy. Hey, y'all, we're going to take a quick commercial break. For y'all that's just jumping on, go invite somebody to watch this too. Don't be stingy with all this great game that you're getting for yourself. Like, invite your friend, invite your neighbor, invite your coworker, so everybody can get this game together. Now, Marvin, with all the stuff that you're talking about, man, like you said earlier,
Go
this
ahead
is not
and
being taught in school.
pin that comment I just put on there. What'd you say?
No, you good. I said, with everything that you're saying, like you said earlier, this is not being taught in school. It's not being taught in college. So the only way that we gonna get some of this game is, like you said, I mean, is getting a mentor, getting connected to somebody, not necessarily just from the standpoint that they know everything in the entire world, but if it's a particular space that you're trying to gain some more knowledge in, why not hire a mentor? You will literally take your business to the next level much faster. We talked
Yeah.
about being faster earlier. Y'all go ahead and type that in the chat again, faster. If you want to make money faster, it's time to get connected to people that have already generated the wealth. They didn't already been where you're trying to go. Like, listen, there are certain mastermind programs, there are certain inner circles that you sometimes feel like, man, well, I don't know if I got all that bread. What if you made a decision starting today that I'm gonna cut the fat off of some of these areas that's not actually producing anything in my life, and I'm gonna use that money that I was paying for all this dumb stuff to start investing in my future. Because at the end of the day, like I just told you, I'm 40 years old. I feel like I'm fresh at 40, but I'm getting better every day. But at the same time, I'm not getting any younger. I can't get younger. It's not possible. So since the ages are going to increase, my kids are going to get older. Their needs, their things, their responsibilities, the activities they want to be involved in. My daughter want to go to France, so I got to take her to France, y'all. I can't be like, no, baby girl, you can't have that. The only way I'm going to be able to get to these different places and different levels is if I get connected to a team of people that's already doing it. Just being around in their energy will literally take you to the next level because your expectations for themselves is automatically going to make you feel like you got to level up just to be around them.
Problem is,
Marvin, speak to like that mastermind circle, like this inner circle, mastermind groups, the importance of being connected to people.
yeah, for sure. Problem is, Manny, is that most people think that they have to work harder. We're programmed to think that if we want to succeed, we have to work harder. And the reality of it is sometimes it's not working harder. It's actually putting yourself into a position of leverage where you can where you can be smart. Like I'll give you an example.
Yeah.
Of a girl who thought she had to work harder. When quite frankly, the answer was right next to her. The only thing she had to do was open the door, and it was right there. And I say that literally. So I snuck this girl in the house one time when I was like 17. Snuck her in my mom's house, and my mom came back early. So I told her to go out the back.
Bro, this sound like Boys in the Hood.
Oh yeah, it's kind of like that. But check the story. So I say, just go out the back. Just go out the back. Go around to your car. I'm going to distract her and stall her so she won't go in the kitchen for a while. She said, oh, I bet. She leave out. My mom, I'm talking to her for like a good 4 or 5 minutes. I'm like, surely she gone now, right? My mom go into the kitchen and see this girl trying to hop an 8-foot wooden fence. Like, what are you doing? Like, literally, the door was right there. All you had to do was pull the knob and open it and leave out. The door was unlocked. But this girl, that's what many of us do in life. Like, the answer is right to you. That answer is a person. That answer is a mentorship. That answer is somebody who's been where you are. But you decide you want to try to do it and figure it out yourself. So you're doing it the hard way. You literally trying to hop an 8-foot fence when the answer is right next to you. And many people think they got to wait for their season to be successful. Like, it ain't my season. I got to wait for my season. Problem is, you confused. Your season is not a time. Your season could be a person. If you just literally just tap into the right people, like I did last year when I invested into a mentorship. I tapped into a mentorship, and 1 year later, after tapping into that mentorship, I doubled my income. I got a Lamborghini. I got a $2 million house. Everything has changed in my life. The relationships I've had has changed simply because I got around the right circles and I got around the right people. I didn't wait for a time. See, time is infinitely more important than money, right? Some of you are disappointed in your life because you think you're not making enough money. You're trading your time for money, and you think you're not making enough money. That's not the problem. You are making enough money. I don't care if you're making only $50,000 a year. You're making enough money. It's not that you're not making enough money. You're just not making it fast enough. So if you're making $50,000 a year, only thing you got to do is learn how to make that $50,000 in a month. You're making $50,000 a month. You just got to learn how to make that $50,000 in a week. Or maybe you need to learn how to make that $50,000 in a day. It's just the speed in which you make it. So is $1 million a lot of money? Well, the answer is it depends, right? It depends on how long it takes you to make the $1 million. If you're working a $50,000 a year job and you'll make $1 million if you work long enough. If you work for 20, 30 years, that adds up to $1 million. So you made $1 million. But if I make that $1 million in a day, who's richer? It's the speed in which you execute that's going to determine your destiny. It's going to determine your success. So if you keep being a debtor, then yeah, it's going to take you a long time to become rich. In fact, you may never become rich because you're constantly in a rat race. If you're a saver, you may eventually become rich, but you just work in the 40-year plan.
Yeah.
But if you turn into a wealth creator and you learn how to create wealth fast with rapid speed and do it over and over and over and learn how to collab and learn how to partner and learn how to leverage your time, your money, your energy. Like this conversation right now is leverage.
Yeah.
Manny is talking to me. Some of my followers are getting in. He's able to leverage my followers, and they might say, man, I like this Manny guy. Let me follow him. Well, if he would have just went live himself, maybe he wouldn't have had as many people. He's leveraging this, and I'm leveraging his knowledge. So we're leveraging one another in a win-win situation. So learn how to leverage, learn how to partner, learn how to collab, and your money will just grow faster than you ever could imagine. Money is easy when you learn it.
Now, let's touch on today pain point though, Marvin. So let's talk about that person that is not connected to nobody, that constantly has negative people around them. What type of results are they gonna get?
Well, you got to learn that it's okay to pay to play. That's the number one thing. I know people in our community, they say, well, I'm not about to pay anybody to network. Like they look at that like it's the devil. But I'll tell you, I've never met a rich person who's never paid to play. And what I mean by that is, I didn't have the network. I grew up homeless. I lived in a shelter for a while. My dad was in jail my whole life. I grew up in the hood. Like statistically, I'm not supposed to be where I am, but I had to learn when my mentor showed me that you need to, if you can't get in the room, you pay to get in that room. I don't care. It's worth it. Believe me, it's worth it every single time. Also, you got to learn to not be the smartest person in the room and get away from negative energy and get away from a negative environment. A lot of times, the people who are listening, they wouldn't be listening right now if they didn't have the mindset to want to do better, the desire to want to do better, right?
Yeah.
The question is, Manny, is how many times have you, I'm talking to you listening right now, how many times have you wanted to take advantage of an opportunity and do something different and change your life, but you got discouraged by the people that's around you and you didn't do it? And you decided that, well, yeah, you're right. Maybe this is not right. Maybe this is a scam. Maybe I shouldn't do this. And it stopped that dream.
Yeah.
So I like to say people are like, it's like you're a giraffe, right? This is my giraffe. So you're a giraffe. That means you have a vision. That means your neck can hang over high above the trees. You can see everything above the trees. You got a clear vision. You got a clear dream. You know where you're going. All of that is easy because you can see it. You're above the trees. The problem is when you start to get a little bit weary and you start to self-sabotage yourself and you bend your neck down and you try to get permission from a turtle. Now, the turtle is not a bad person. The turtle wants what's best for you, but the only problem is they can't see as you can see because they weren't built to see your dream. Only you're built to see your dream, not them. So they tell you, I can't see it. It don't make sense. And you keep your head down and you keep wondering what you should do. Then you pass out. Problem with the giraffe is all of their oxygen flows through their neck. So if they keep their head down too long, they will literally run out of oxygen and pass out. And sometimes they could even die. So some of you are stuck still and you're dead exactly where you are because of the fact that you will not leave your circle and you will not get attached to people who could do something great for you.
Hey, bro, you preaching now. I'm about to tell them to pass the collection plate.
Right.
I'm giving y'all the game. Make sure that you're inviting somebody in to listen to this. Now, what you're saying is so real, though. And I think that, in terms of this turtle, like you said, it's not a bad person. But they don't have the ability to see anything remotely close to what you are seeing as a giraffe. And listen, you being a giraffe, you were meant to be a giraffe. Now, everybody is not a visionary. Everybody ain't going to see it. Some people, It's really, really good at the implementation stage. They can
Right.
help you get that thing going. But some people are visionaries. They just see things that don't nobody else see. It don't even make sense to them, but they know that it can happen. If you are that visionary, stop talking to the turtles. It's not that they're trying to put you down. They're not trying to hate on you. They just don't have the ability. They were not made to look at the same stuff that you're looking at.
They look at
They,
everything that you do because they want to protect you.
yeah,
Understand that. They don't, it could be your parent, it could be somebody you love.
yeah, yeah,
They want to protect you, but the
yeah.
problem is they seeing everything like it's a cliff. They think you're gonna fall off.
Mm-hmm.
They want to protect you.
Yeah, yeah.
But you know, you can see high enough to know that it's just a curve. All you're doing is you're stepping over a curve and they think it's a cliff. So at some point, you got to put your foot down and say, I'm not going to let you destroy my dream. I'm not going to let you. I love you.
Mm-hmm.
My own mom. I remember when I moved into, when I wanted to buy my own home when I was young. I was like 20, 21. I wanted to buy my own home. My mom found everything wrong with it, everything that could potentially go wrong. I don't see this. You shouldn't do this. You should. And I love my mom to death. But at that time, if I would have listened to her, they would have stopped me from my destiny.
Wow.
Now my mom proud of me. She was like, I knew you could do, of course, right? But, and she did. I'm not saying she didn't believe in me, but at the same time, she was afraid for me.
Yeah.
At the same time, she was afraid for me. It's like my mom, my stepdad, mostly my stepdad, I was working at Wendy's and Lowe's. I had 2 jobs at Wendy's and Lowe's. I got an opportunity to be a financial advisor, which is what my goal was. Since my grandmother lost a lot of money in the market, I was going to be a financial advisor.
Okay.
I got the job at Edward Jones, and they were so afraid because if I didn't pass my test, I wouldn't have had the job, and I had to actually quit my job at Lowe's in order to take the test.
Wow.
Lowe's offered me a pay raise, so instead of me making $10 an hour, I was going to get paid $13 an hour. They were more concerned about me missing that $3 raise than me taking the advantage of having a multi-million-dollar company I have right now. So again, they can't see your vision. You have to take your vision and say, I'm going to do this no matter what. Nobody's going to stop me because God wouldn't have gave you the desire to do it if you couldn't handle it. He won't put more on you than you can bear. You just got to do it.
And see, and here's another deep part about it is, in some instances, people get afraid for you because they've never seen nobody go where you going. Like I know for me, like got my bachelor's, got my master's. When I started to achieve those goals, nobody had did anything like that. So it was just like, well, hold up. Don't put too much pressure on yourself. Like, you got your bachelor's already. Like, why you got to get your master's? Like, well, what you trying to prove? Like, I'm just trying to go to the next level. And at the time, I felt like having a master's going to give me more money, all those things.
Right.
But then when I started my business, bro, and I hit 6 figures for the first time in 2020, that was something that none of my friends had ever done. My friends had probably made about $500 to $1,000 in a month, and they felt like they was doing big things just getting that. But
Right.
when I start telling them, like, listen, man, like I'm tapped into some individuals that's making $1 million in one day. They like, man, that's not possible, man. It got to be a scam. Because they ain't never seen nobody do that before. But when I told them, I said, listen, I'm now over 100,000, y'all. Wait a minute, but how you do that? Why don't you tell me? Listen, I've been trying to tell you, but y'all not tapped in. You're not willing to do the work that I did. Now,
Congrats, bro.
let's talk about this too, bro, because it's like that discipline factor that a lot of people shy away from, but those are the things that's going to get you to wealth. It's taking the time to read and study and read all these books, listen to books, doing your affirmation, getting around a circle. That take work. Now, the work that you think is going to take is you contacting a bunch of people saying, hey, will you buy my stuff? That's unproductive work. But if you start putting the work in right at the beginning to get yourself where you need to be, working out. Like, listen, I'm 40 years old, like I said, y'all. I'm not about to let myself have this big old belly out here trying to have a productive business, trying to be attractive. You see me and Marvin both doing IG videos. We're not 25, but we tapping into something because we know we got to put in the work.
Yeah. The biggest problem with most people is that they're trained from the very start to have a scarcity mindset.
Mm.
Like, we're raised around conversations like, I can't afford it, or you can't do that, or nobody has done that before. What makes you think you could do it?
Mm.
All of these conversations that are in our head that sticks with us, because got to understand, the Bible says death and life is in the power of the tongue. So you're either speaking life or you're speaking death. So if you're speaking against something, you're speaking death to it. So it's hard to overcome that unless you actually put in the work to overcome those negative thoughts through affirmations, like you said, listen to podcasts, doing all of those different things. And also, we're trained to think negatively of the rich. Like, if somebody's rich, we're automatically trained to say, to put this person against this person. They must be a bad person because they got money. Like, these people that got rich, they don't care about us. They don't care about the poor people. In the reality, there's bad poor people and bad good people and good poor people. And there's bad rich people and bad poor people. You got to change your relationship to money. You got to change your relationship when you see somebody with money, instead of saying, I wonder what they doing. Oh, they drive a Lamborghini, these fast cars. They ain't out here disrespecting the road, blah, blah, blah. No, say, no, what did you do to get that? I'll tell you this. I learned, I was making about 100K, and I was very frugal. I was very cheap. And I didn't realize that me being frugal and cheap was actually keeping me into a scarcity mindset, because by me being frugal and cheap, I was attracting a frugal and cheap lifestyle. And it was actually costing me more than it was saving me, even though I thought that I was saving. So I remember when it kind of hit me. I was reading The Secret, and I was looking at the book on the show The Secret, and it taught me to start saying what I want. So I wanted a Range Rover. So I kept saying, I want this Range Rover. I manifested it. I put it on the vision board. It had peanut butter seats. It reclined.
Oh, that boy sound nasty, bro.
It was. And I remember I bought it. I ended up buying this Range Rover, bro. And when I bought the Range Rover, I still kept my old car I drove for like 7 years, because I said, look, I'm not going to really drive this Range Rover much because I don't want to put miles on it. I'm going to drive my old car. Problem is, once I started driving that Range Rover, I never got back into the old car. My battery died on it 3 times. I ended up giving it away because the battery kept dying. But here's the thing. As I was driving in that Range Rover, and I was feeling the luxury and feeling good just driving it, it did something to my mindset. Something real powerful to my mindset. I began to think that I deserve it after a while. I began to get rid of these limiting beliefs, these self-sabotaging beliefs. I began to understand what it's like to actually drive in luxury. I felt the difference. And you know what? That was the year that I started driving that Range Rover that I made my first $1 million.
Wow.
I made more money by spending more money on myself. 6 months later, I got a Lamborghini. 3 months later, I started the process of looking for a home. I got a $2 million home. Now, some of you are thinking, but you went out, you made this money. Oh, the first time you made money, so you going out wasting it, being frivolous. Like, this is the way we think, right? We think when somebody has something nice, they must be being frivolous with your money. And those are the kind of thoughts you have to get rid of, because I had to learn that there is something called luxury arbitrage, which means that it's possible to have more luxury and make even more money. Let me give you an example. My Lamborghini, when I got my Lamborghini, I actually, and let me stop my camera so you can see it. My Lamborghini, I call it the Green Goblin, right? So when I got my Lamborghini, all of a sudden I started a mentorship. Nobody wanted to buy that mentorship. I had 4 people that bought into my mentorship before that for like 4 months. I got the Lamborghini, 27 people posted like, I'm ready to join your mentorship. 27 people. I made $120,000 in one day after I paid $270,000 to get the Lamborghini. It was almost paid for. Now,
wow.
If I was going to rent it out on Turo, but I ended up not renting it out because I was making more money simply by having a Lamborghini. But check this out. If I would have put it on Turo at that time, it would have made me $1,100 a day. So I would have made a profit of about $10,000 to $15,000 a month. by having a Lamborghini, I could drive anytime I wanted to. On top of that, my $2 million house, I bought it in Atlanta. Manny, where you live?
In Cleveland?
Huh? I said, where do you live?
Cleveland, Ohio?
Cleveland, Ohio. Okay. So I live in St. Louis, Missouri. And I bought this house in Atlanta. People are like, that's crazy. Why would you buy a $2 million house? You don't even live in Atlanta. All right. That's not thinking right. Again, I got to change your thinking. Yes, I don't live in Atlanta. Yes, the home cost me about $9,000 a month. It don't make sense.
Bro, you starting to break up again.
All right. Can you hear me now?
Yeah, it's still like a little choppy.
All right. I don't know why. I've been sitting in the same exact spot. Can you hear me now?
Yeah, I can hear you, but you still frozen, so I think now you still frozen now too.
Hold on. All right. Is that better?
Yeah, that's better.
All right. Let me know if I'm chopping up because it looks like I'm good.
Yeah,
So
you
can
sound
y'all
good.
can
Yeah.
y'all hear me in the chat? Let me know. I want to make sure y'all getting this. So my house, bro, $9,000 a month. But guess what? It rents out for $3,000 a day. A day.
Wow.
10 days, that's 30 grand. That's a $20,000 profit. And I still got the house for 20 days. Should I want it? So
Yeah.
with that being said, again, when you get the right mindset, you realize that any so-called liability can be turned into an asset if you got the right mindset to change it around. Like I met with a client today. He said, should I sell this form? It's a liability right now. I said, well, it's a liability. If you want to make it a liability, it can become an asset. You can make anything an asset. Do you want it to be an asset? He said, yeah, I want it to be an asset. So you're not on the form. He was on this farm. He got a pool built. I've never seen a pool built on the farm, but this guy had a pool built on the farm. It was crazy. Once at the end of our meeting, he realized that dang, all he had to do was rent it out. It's a nice farm. It's crazy. It's gonna rent out for $1,000 a day. He told me it's fully paid off. He's only paying about with property insurance about $550 a month. I was like, you
Wow.
rent that thing out for one day, it pays for it. It's an asset.
That's
And
crazy.
your family can still go down there and enjoy it anytime they want to. So, with that being said, somebody say asset. Somebody say the word asset. That's what we got to do. We got to think about buying assets. That's why when we're talking about building generational wealth and we're talking about you utilizing your life insurance in order to do that, you're only borrowing against that so that it keeps growing. And you got a death benefit. It keeps growing tax-free so that you can go out and buy assets. You go out and buy assets so that you have your money working for you 3 to 4 times at the same time. Again, what you want to do is you want to create what I call money babies. You want pregnant money. Pregnant money so that money keeps producing more money and you're creating workers. Every dollar that you have, you want it to be an employee. You don't want to work for your dollar. You want your dollar working for you. This is how you have to think of every dollar that comes in. Okay, I got this money. How can I make this money make money for me? How can I make this money do something? Do I want to put it into stocks? Do I want to put it into Airbnb? Do I want to do an event space? Do I want to do a real estate? Do I want to do vending machines, laundromats? Like, what can I do? What asset can I buy? All right. You always got to think about the assets that you can buy, not the liabilities. Because people who are smart, they see me having the Lamborghini. They see me having the $2 million house. But what they don't see is before I bought that Lamborghini, I bought me an asset that was gonna give me enough income to be able to take care of the Lamborghini. And it just so happens that I made the Lamborghini an asset too. I made so I bought the asset to buy the liability, and then I turned the liability into an asset to buy another liability that I turned into an asset. Y'all ain't gonna get that. Y'all will get that later.
Man. But that's why I go back to that point about strategy. Now, if you didn't know that, then maybe you would have treated each liability as a liability and it would have been a pain in the butt every single month for you.
Mm-hmm.
But because you had that mindset, maybe you got that game from somebody else, but you was literally able to make this liability an asset, get
Yep.
another asset, flip that. Come on. But that's the type of game that you get told when you're around the right people. When you're around the wrong people, you're not gonna get that game. And again,
Yep.
no fault against who the turtle is, but the turtle is not seeing the same stuff that you see. That
Mm.
giraffe is gonna see some stuff. And sometimes you got a strong giraffe on your team that's like, hey, Marv, don't even do that. You like, wow, this look good. No, right now you thinking like a turtle, and it's no fault of yours, but you ain't never been up here where the giraffe sat. So let me give you this game on what a giraffe would do in this type of situation. And that was such a smart, dope play that I'm thinking, man, how can I capitalize on the same thing, Marv? Because that was such a smart move what you did.
Yeah. Yeah. I mean, it's all like, well, full disclosure, that wasn't like when I bought the house. I would love to say I was thinking smart at that time,
Okay.
but I kind of wasn't. It kind of fell on my lap because when I
Mm-hmm.
bought it, I planned to move to Atlanta, but I wasn't planning to move for 6 months. But I was talking
Gotcha.
to a realtor just in case, and she found like the perfect house. And like she was great. She was like, "You need to go ahead and buy this now." I was like,
Mm-hmm.
"Dang, I don't want to buy." She said, "Don't no modern house come available like this in Atlanta. I'm telling you, buy it now." I went ahead and bought it. Then I was like, "What am I gonna do with it?" That's when it had to come to me. I'm not living in there, so I got to make some money. But now that I
Mm-hmm.
got the play, that thing it fell into my lap. But now that I got it, I'm like, man, if this works here, will this work in Miami? Will this work in Houston?
You already
Could I
know.
have
You
luxury
already
homes all
know.
over the place and making money all over the place? I don't see too many people in our circle saying that they got mansions out here that they making $20,000 to $30,000 a month just by having a mansion. I
It's
have
a
10
cold
mansions
play.
all around the world and just making all the money I can make, So it's crazy.
Man, because it's a whole nother element. Like, it ain't even on some Airbnb type stuff. It's a whole nother play that's
That's a
right there
whole
in
nother
front of
level.
everybody's eyes that this is not taken advantage of.
No, it's like I'm saying. It's a gap. It's a gap. Shout out to some of my people I see in the room today. I see Lex in the room today. She's crushing it. Wasi is the option sniper. Mr. Option Sniper crushing it. Just I think my guy just made pretty close, if not already, just did 1 million in a day.
Congrats.
Just did 1 million in a day. So congratulations, Wasi.
Congrats.
I'm right behind you, bro. And then we got my guy T, the tax guy, in the building. This guy owns like a huge tax firm, crushing it. I think his program is called Dragon Tax or something like that. But he's crushing the tax game. Him and his wife. We were just at a Lamborghini rally up in Miami, and with about at least a couple hundred Lamborghinis, at least just driving around. So that was fun. So my guy Cal Blackson, he's a financial advisor, crushing the game and out there in Florida. So seeing a lot of my good people in the room today. Wanted to give y'all a shout out. But yeah, man, I'm just telling you, everything. The hardest part is to get started. The hardest part is really just getting started. If you get started, like you're not gonna be perfect. Like you might even lose something as you're
Mm-hmm.
learning in the process. Like when I was learning how to create assets into liabilities, man, the thing about it is it wasn't always perfect for me. I lost so much money in the very beginning, but every time I lost money, I didn't give up. I didn't stop. I said, okay, what could I do different the next time? Like you cannot be afraid to make a mistake. John Maxwell said it best. He says, sometimes you win and sometimes you learn.
Yeah.
You never really lose as long as you just keep going. Just do it. Learn from your mistakes. But I tell people this all the time. These are for the people who are nervous to make any kind of mistake so they don't do anything. I will make a mistake 3 times. And the fourth time, I'll get it right. And I'll be ahead of the person who's been waiting for the perfect day and the perfect time to take action. I've taken action 4 times, lost 3 times, but that fourth time I won big and you haven't even moved yet.
Mm.
So move. Even if you move in the wrong direction, you will be readjusted. But an object in motion tends to stay in motion. An object at rest tends to stay at rest. It's a law of inertia. If you stay at rest, And then one day you decide that I'm prepared now, I'm going to take action. You're going to fall flat on your face because you broke the law of inertia. You got to move. You move. You might move in the wrong direction, but at least you move it. Just move.
Flat out. Flat out. Hey, bro, this has been amazing. Let's close it out, bro. And then like tell them how they can get connected with you, how they can tap into any resources, anything that you got going on that's coming up.
Yeah, I'll give you two things. First off, I have a book that you can purchase. It's $37. It's called Become Your Own Bank, where I teach people how to step by step become their own bank. More information that I can give you in this Q&A. But if you go to becomeyourownbank.com, I'm sorry, becomeyourownbankbook.com, becomeyourownbankbook.com. You can tap into it. For those of you who are not followers of mine, you can simply click the link on the top where it says Generational Wealth, and you can follow me right now. So I do a lot of reels and different things like that to keep you educated. The other thing that you could do is if you want a complimentary 15-minute strategy session to talk to you about how you can set up your own bank, simply just go to wealthcreationcall.com and you can set up a complimentary 15-minute call. That's wealthcreationcall.com. And you can schedule a complimentary 15-minute strategy session with my team because not only can we show you how to become your own bank, we can actually set it up for you as well and make sure that you don't make any mistakes. So that's how you can tap in with me, bro.
That's what's up. That's what's up. Any last words for the people?
Last words is, look, you owe it to yourself. You have an ethical responsibility to be as successful as you could be. You want to be the reason that your great-great-grandkids will say, because of the decision that my great-great-grandma, my great-great-grandfather did, they changed the dynamics of our families for generations to come. You want to be a generational curse breaker, which means that you're not going to settle for less. You're not going to settle for mediocrity. You're going to dream big. You're going to make sure that you don't settle for mediocrity at all. I mean, that's what we want to do. So with that being said, y'all, like, you were meant to be the head and not the tail, a lender and not a borrower, above and not beneath. You already have the inheritance. All you got to do is claim it. So with that being said, just go claim it, y'all. Walk in your destiny. Walk in your destiny. Make it happen, y'all. This is your time. This is your season. Your season is now. Remember, your season isn't a time. Your season is a person. Tap into the right person and win.
Absolutely. All right, y'all. Well, thank you so much for y'all time tonight. Make sure
Absolutely.
that this video is saved right on my page so y'all have an opportunity to watch it right from the beginning. There was so many jewels. You can literally probably make $1 million just watching this live.
Oh,
Like
yeah, for
you
sure.
gave out so much game and strategy
$1 million
that,
worth of game.
bro, if they take half of the information, you can make a whole lot of money. But peace and blessings. Y'all have an amazing night again. Thanks, Marvin, for tapping in. Thanks for your time tonight, bro.
Right on. Talk to you soon, bro.
Peace.